Đang ở Mỹ, ở phía nào?
Cháu ở DC ạ.
DC. Okay.
Dạ vâng.
Chỗ đại học nào?
Trường George Mason ạ. Ở chỗ Arlington ạ. Chú Cương đang ở Paris ạ?
Chú đang ở Paris. Bị Covid đâu có đi đâu được đâu.
Dạ vâng, đúng rồi ạ. Bây giờ Paris chắc đang đóng cửa đúng không ạ?
Cả nước Pháp bị phong tỏa mà, theo nguyên tắc.
Chị gái cháu cũng đang ở Paris, cũng kêu quá trời luôn, bảo bây giờ lại đóng cửa.
Nhưng mà giờ cái phong tỏa hiện nay á, nó mềm hơn là cái phong tỏa hồi tháng 3.
À thế à, vâng thế.
Bây giờ
Thì
đi
chắc là
lại
mọi
được,
người
đi họ cho phép 3 tiếng đồng hồ cơ mà.
Dạ vâng.
Một
Dạ
ngày
vâng.
đi.
Chắc là mọi người bây giờ cũng bị cấm cửa kinh quá rồi.
Cái tháng 3 là nghiêm lắm.
Dạ vâng, dạ vâng.
Nhưng mà không biết lúc nào nước Pháp nó mới đi xuống được. Hiện nay nó vì nó làm cái phong tỏa này hơi mềm đó, thành ra là cái lượng người bị Covid hiện nay nó bị chững lại là cứ mỗi ngày là khoảng 10.000 kê, là nhiều lắm chứ. 10.000 mỗi ngày, 10.000.
Vâng, nói chung là cũng căng.
Anh em có thử nên
share slide đi ạ?
Yeah.
Vâng vâng, em vừa thử rồi. Mọi người có nhìn được không ạ?
Rồi em đã thấy rồi, em full screen xem. Rồi, ok.
Vâng.
Chú Cương ơi, chúng ta bao giờ mới bắt đầu ạ?
Cái này hôm nay ai share?
Lan chắc là đã.
Toàn ơi, Toàn quyết định đi. Toàn quyết định đi.
Vâng, thế thì tôi nghĩ chúng ta nên bắt đầu đi ạ.
Bắt đầu.
Yeah, thank you everybody for joining the seminar today. And today we'll have a young researchers joining us. So very happy that anh Pham from George Mason University will present her work on tax policy and household businesses in Vietnam. So please go ahead. And we interrupt you with questions as usual.
Okay. Thank you very much for inviting me and for being here today. So today I am presenting a preliminary project on tax policy and household businesses in Vietnam. And this project is a joint work with Dick Nguyen, who is a PhD student at the Shah School at George Mason University. And he is somewhere in the audience. He will show his face earlier, but I was not able to introduce him. But he's here with us. So this is a very, very preliminary project, and we are at the stage where we have some results and trying to decide where to go next. And it's an excellent audience to present because you guys know a lot of background about Vietnam, and we are excited and looking forward for your comments and suggestions. So small businesses are a large part of developing countries, and many of small businesses in developing countries are in the informal sectors. For instance, the shadow economy is estimated to be about 35% of the low to lower middle income countries. And in India, Indonesia, or Mexico, about more than 90% of firms have fewer than 10 employees, and the small businesses employed more than 20% of the labor force. So this sector is a great potential source for tax revenue because it's a large part of the economy. But taxing small businesses can deter growth, and this consequence is also especially important given the fact that, again, these small businesses are a large part of the economy and is employed a non-trivial part of the labor force. And the matter is even more complicated in the presence of corruption and weak enforcement. So how taxes affect small businesses in developing countries is an empirical question. So in this paper, we examine how increases in tax rates affect household businesses in Vietnam. And we're going to have a formal definition of household businesses in the next few slides. But basically, it's a hộ cá thể in Vietnam. And what we find is that we actually find no evidence for changes in business registration, employment, business revenue, and tax payment. I am sorry, let me just turn off my email real quick here. So that, okay. So I'm going to introduce the policy in the next few slides, but basically it's a huge policy and the result of no change is quite surprising to us. So how this paper or how this project situate in the bigger literature? So obviously there is a kind of extensive literature on tax policy and investment in developed countries. In developing countries, there's a growing literature on tax compliance. And there is smaller literature on tax policy and firm behavior. And by firm behavior here, what I meant is investment decision, growth decision, which is a little bit different from tax compliance decision. And within that, there is even more limited evidence on how tax policy affects small businesses. And this limited evidence focuses mostly on entrepreneurs and business registration. So our contribution to the literature is that our data and our identification strategy allow us to examine a broader set of small businesses, not just entrepreneurs. And because of that, we are not only able to look at registration status like other papers have looked at, but we can also look at employment, business revenue, and some measures of tax payments. And we believe that our project improved data quality in the literature to our best knowledge. This is the first large-scale panel data that tracked firm registration status of hundreds of thousands of firms over time. And the existing panel data set that include informal businesses mostly employ much smaller scaled survey data. So a little bit about household businesses in Vietnam. They have less than 10 employees located in one location, and they follow a very simplified tax system. And what I mean by simplifying accounting system is that as opposed to enterprises or doanh nghiệp who have to basically fill out a tax form and follow a more or less rigorous and standardized accounting rules. These businesses, household businesses, only need to follow a very, very simplified system compared to that. And household businesses in Vietnam do not have to register if their income is lower than a certain threshold. Before 2015, the minimum threshold was set by the central government and varied by geographical region. And after 2015, the provincial governments have a responsibility to set this threshold. So household businesses are an important part of the Vietnamese economy. It makes up about 17 to 30% of total GDP and at least 30% of employment in Vietnam. So how does the tax system in household business work? So the most important taxes that business or household businesses in Vietnam have to pay are a value-added tax or VAT and personal income tax or PIT. So before 2014, the way that VAT and PAT were understand is similar to how enterprises would have to interpret VAT and PIT. Specifically, VAT is a tax on added value. So in theory, businesses and tax office would have to decide how much added values this product give and then tax on that value. But as I said earlier, household businesses follow a very, very simple accounting systems, and cash usually the main mode of transaction. So it is very hard to identify the correct added value. So as a result, the Vietnamese government kind of giving out different system and guidelines to how to determine added value. So in a very, very simplified term, we calculated different things, and we basically we come up, we was able to simplify the way that VAT is calculated in Vietnam, in the sense that before 2014, you can think that the central government kind of set a range of VAT rates, and this range varies by 5-digit industry and commune. So commune is the smallest administrative unit in Vietnam. And even though it's not spelling out in the documents, but after we did kind of tracing back different calculation, we can attribute the tax base of VAT to business revenue. So you can think of VAT before 2014 is a flat rate. The base is revenue and per 5-digit industry and commune. And the central government set a range with the minimum rate and the maximum rate, and the provinces decide the specific VAT rates within this range. So before 2015, basically PIT, the same idea, varied by 5-digit industry and commune. And but the only thing different between VAT and PAT is that PAT is not a flat rate, but is progressive based on the revenue bracket that you're in, and also provinces decide the specific rate. Actually, before I move on, I just want to ask quickly, anyone have any questions about the background so far? Okay, so let's move on. So unfortunately, we can only find specific VAT and PIT rates for 3 provinces in Vietnam. So if you have any idea of connections and who have that, happy to basically get your guidance on that. But we could only find for 3 provinces. So we use these 3 provinces as reverse checks in our main identification or our main estimation strategy. We use tax rate range by the central government to determine our tax rate. Specifically for each industry and commune, we calculate the tax rate to be the average of the maximum rate and the minimum rate set by the central government. So that was before 2014 and 2015. After that, things get much simpler in a sense that after 2014, VAT rate was actually a flat rate on revenue and also varied by 5-digit industry. So there is no commune anymore, only varied by 5-digit industry, and was set by the central government. And after 2015, PAT rate was also a flat rate on revenue varied by 5-digit industry and set by the central government. So essentially after 2015, yes?
Hi. I just want to clarify something. So the personal income tax is also by industry as well. What if
Yes.
a household have income from different industry, from different revenue streams? Then
Also, you mean that what happened if the businesses have several industries?
yes, I'm just because I'm normally personal income tax, and you see it as in terms of person working, right, and not so much at the household level. So why is it
Yeah.
carried by the industry here?
Why? I think just the matter. I think we're gonna go over for a moment, but I just think that the government just really want to simplify the tax system for households businesses, and is it's harder to kind of have an accurate determination of how much a person make if they work for, like, let's say like a noodle shop, right, a restaurant. I think it's harder to have that estimate because nothing is formal if they have not a formal employees. So I think by just putting in industry, it's easier to have a sense of on average how much an industry make. So that was my suspicion of why the government set at the industry level. Okay. Any other question? Actually, I'll let that answer your question.
Yeah, thanks. But then,
Okay.
what would that be the difference between VAT and PIT for, say, a single auto entrepreneur, a self-employed person? Because, like, you subtract all the sales or the cost of buying inputs, subtracted that from the sales, then you have profit. Is that also what is that liable to then?
So I mean, so that was actually what the government was trying to do before 2014 and 2015. So exactly what you said, they was trying to do that. But the thing is, it's very hard to estimate the real cost of these businesses, and that's why they have this long and very complicated laws and trying to trace back and how they can base how they can base the rate on revenue, because apparently it's easier to tax on revenue. But the idea is still the same, that VAT have to be on the added values and PAT have to be on income. But the reason is very hard to find out what the real income is and what the real added value is for these businesses. And even though the law is saying that VAT and PAT are two different taxes, but at the end of the day, they were trying to do a lot of decrease, write different decrease and clarification to try to determine what added values, how to calculate added value from revenue, and how to do it from how to do income from revenue. So and everything on that is based on industry and commune. So I think the long story short is that yes, in theory, that how it should be calculated. In practice, they don't know how to do it, so they have to write law based on industry and commune, which I think they know a little bit better, and based on revenue. But after 2015, and that's why it's kind of convoluted after 2014 and 2015, but after that, they got also realized that, hey, this is kind of silly, maybe, I don't know, I'm not sure what the government is thinking. But so they decided that, hey, just put everything based on the revenue and based on industry. Because of the convoluted law that we wrote earlier is essentially is based on revenue. And that's why here you can think that VAT and PAT can be consolidated in one turnover tax. So basically, it's no difference between VAT and PAT here. You can just add the two rates up, and that is how businesses in Vietnam have to pay. But that the government still issued separate documents for the two taxes, and that is why I'm going to use the terminologies for the rest of the presentation. I want to pause here to see if any other question. Okay. Oh, I think somebody, sorry, if you want to ask question, please unmute other than put in the chat, because I would not keep track of the chat. But somebody was asking, or Quang was asking more 5-digit industry. You know, the 2-digit could be manufacturing, right? And the 5-digit could be automobile manufacturing. Something very detailed, and it's actually the last kind of the most detailed in the Vietnamese way of classifying industry. Hope that answers your question. Okay, so this is the how VAT rate changed from 2012 to 2017 by sector. Red is in 2017 and blue is in 2012. And again, even though that the rate changed by 5-digit industry, which is a very detailed industry level, we aggregated it up so that it's easy to draw the graph. As you can see here, that the average VAT rate in 2012 is 1.3 percentage point, and in 2017 is 2.2 percentage point. So from 2012 to 2017 is kind of a big increase in VAT rate across the board. PAT is the same. We can see the big increase across the board. Again, red in 2017 and blue is in 2012. Average PAT rate in 2012 is 0.48%, and average PAT rate in 2017 is 1.08%. So it's a big increase. And this is the change from 2012 to 2017 by provinces. Left panel is for VAT and right panel is for PIT. Darker colors mean that there is a bigger change, and lighter color is smaller change. As we can see here is that the change vary across provinces, and ranges from a very, very small change on average of 0.144 percentage point to 1.17 percentage point for VAT. So because of this wide variation in tax rate, this is give us our how we identify our main independent variable. So come to, I think somebody was asking earlier about for the motivation of the tax reform and how it's proceeded, right? So basically the official motivation that when I read from the tax office when they give to the businesses and citizens is that the tax reform really wants to simplify and increase transparency in the tax system of households businesses. As I said, as I described a little bit earlier, before 2014 and 2015, the rate is based on industry and commute, and also it's very convoluted calculation to get to the rate. But after 2014 and 2015, the central government set the rate, the flat rate based on revenue and industry, and you can just read it from the decrease in the law. Actually, from the law itself, you can just read it. You don't have to make your own calculation. So that is the official kind of reasons why that is the case, and just from my own speculation, which I'm unsure if it's right or not right. As you could see earlier in the graph, you could see that the increase of VAT and PIT across the board. And basically, I think that because of the tax rate increase, and also there's an intensive discussion within the Vietnamese policymakers about how household businesses are a large part of the economy and it can have a great potential. So I speculate that maybe the increase in the rate is because the government also hope to be able to collect some tax revenue from this sector of the economy.
Can I ask something here?
Yes.
Yes. Is in other than the rate change, is there a difference before and after 2015 in terms of who collect the tax and who get the tax? Is that provincial government versus central government?
So I I don't think that, so that's a very good question. So I think the local government is still the one who collects the tax. So this is tax at the district level, like chi cục thuế would have to collect them. And I don't think that, especially in this period, I don't think that is the provincial, I mean, it's a change in how the revenue is shared. I think part of that is going to go to the central government, and part of that going to be kept by the provincial government. But I have to look more into it, and if anyone have any knowing about any law about the change in the share, then please let me know, but I'm not aware of that. Does that answer your question?
It's great. Thank you very much. I'm just thinking back to the graph you showed earlier, where the more regions in the north west is the one that actually seeing a higher tax increase, typically the poorer one. So there I was just thinking, is that related to the income level of the province, or because then they're more reliant on local tax base, so that they have to do
okay.
it. We haven't
so
the endogeneity of your variation.
Well, that is a great, actually that's a great point. And as I said earlier, that before 2014 and 2015, tax rate vary by industry and commune. And then how they set up this rate is that actually what they call the more disadvantaged area, which is like the one in the north here, right? The central government set a lower rate. But after 2015, it's actually the locational aspect of it got disappeared and everything by industry now, and that is why they see a big change here. So definitely there was something kind of different in terms of location for the firms that receive a higher rate increase. But I think mechanically, because they get rid of the locational aspect of the tax rate, and before the tax rate was accounting for the fact that, oh, this region is poor, and that's why we tax them lower. This region is rich, we tax them higher. But now after the tax rate, after the tax law change, they don't take that into consideration, and that's why we see a bigger increase for the firms in the poorer area.
And so this is also the applied tax rate as well, like taking into account the composition of industry within each provinces.
Yeah.
That's great. Thank you very much.
So how was the law got formed? So a committee was formed in June of 2012 to collect opinions of experts, government agencies, and related parties to draft the new laws. So basically in Vietnam, you're familiar with how the law is made, that before they submit it to Congress, they have to kind of have other people to take a look at how the draft was written and what else people want to incorporate in the draft and the opinions before they submit it to Congress. So Congress passed the new VAT law in June 2013 and effective in January of 2014. And the new PIT law was passed in November of 2014 and being effective in January of 2015. So as far as we know, because the committee was formed in June 2012, and that was then after only the committee was formed, the opinions were sent out, publicly available for people to give their suggestion. We don't think that household businesses know much about the law change or the detailed law change before June 2012. So we don't think that there are any anticipation effects before June 2012. So this is become very important when we explain our data and how our identification strategy work. But for the rest of the paper, what we're expecting here is that before June 2012, nobody knows about the tax policy, so everything happened as usual before June 2012. After that, the policy change is just when behavior is affected by the change in the tax law. So before we go into the data, we want to kind of give some expectation of what we think the effect should be or would be. So here we have the situation where tax rate increases without any behavioral change. Let's say firm, when tax rate increases, firm do not do anything like differently that they would do otherwise. Then because the tax rate change or increases, businesses would have to pay more taxes to the government, and or they would have to bribe the tax collectors more because now the tax collector have a higher bargaining power. So regardless of who they pay more, they have to pay more. And in our understanding of the small business literature, these small businesses, and especially in Vietnam, we talk about like hộ cá thể here, like household businesses, right? They are very, very liquidity constrained. And when they have less money in hand, or because they have to pay more to either to the government or to the tax collectors, they have less money to invest in their business. So what we think is that when they have less to invest, they may decrease their revenue because they don't have that much investment, decrease in the number of workers that they can hire. But the result on whether they decide to register or not is unclear. And the reason is because Bracha and co-author in 2018 find that tax rate decreases registration status, because in a sense that now if I join the formal sector, then I have to pay a higher tax rate, right? So and therefore I don't want to join the formal sector because being in the formal sector is very expensive now. So that is one argument of why tax registration status may decrease as a result in an increase in tax rate. But another paper that I write with some co-authors and actually just published this year, 2020, what we find is that in the case of Vietnam, interestingly enough, corruption actually increased tax registration status. And the rationale and the mechanism that we were able to empirical test for in the paper is go as the following. Basically, tax registration status give tax collectors some kind of firm's information, right? The phone number, how much money they make, where do they contact them, addresses, X, Y, and Z. So in essence, for tax collectors, it's so much easier to track down registered firms than unregistered firms. So a corrupt tax officials would have more incentive to try to register these firms so that they can track these firms down and so that they can collect rent for themselves. So if that same thought and argument goes, which of course we don't know if it's true or not in this case, then we can think that when tax rate increases, tax collectors have more bargaining power over firms. So they have more incentive to register these firms so that they can track them down and collect rent from them. So if that's the case, then we would expect that increase in tax rates mean increase in registration status, not because firms voluntarily register themselves, but it's more like the tax collectors are more willing to put in an effort to register firms.
Are you able to sell something?
Yeah. Sorry, I can't hear you well. Any question here? Okay, I guess I move on, and if you have a question, you can come back. And result for tax payment to the government is also unclear because here on the one hand, you have a higher tax rate. On the other hand, we could have a lower base if the business revenue decreases. So, so that was what we expect ex ante before doing the empirical exercise. So what kind of data do we use? We use a Vietnamese household business survey. This is a census of all household businesses in Vietnam, collected by the General Statistical Office in June 2007, 2012, and 2017. So with the information that the GSO gave us, we create a firm panel data set by matching the exact street addresses and owners' names. So we don't have firm ID across years. We have to match them by street addresses and owner names. And after 2 years of matching the data, we was finally to match 500,000 businesses from 2012 to 2017 and 100,000 businesses in 2007 and 2012. This is a panel data, okay? Balanced panel data. So the census asked firm question about registration status, number of workers, and business revenue in the first 6 months. And in 2012 and 2017, they select a random sample of firms to ask about their tax payments. And in 2007, all firms was asked about whether or not they paid VAT, but not the amount. So the information we have on tax payment is much more limited, and we have much more substantiate information about kind of basic information about businesses. So this is how business looked like in the first month of 2012. Only 30% of them have a business registration card. The average number of workers is 1.6. And the revenue in the first 6 months is about 120 million Vietnam dong. The tax liability they have to pay in the first 6 months is about 1.2 million Vietnam dong. So this actually fitting quite well nicely with how the average tax rate is about 1 to 2 percentage points based on revenue before 2014 and 2015. And about 45% of them is in the retail and wholesale sector, 45% of them in manufacturing and transport, and service and construction is about 8%. So this is our identification strategy. Y is a dependent variable. This is our outcome variables. Vary by firm, F, industry I, and I is at the 5-digit industry level, commute C, and time T. We put in firm fixed effects and year fixed effects. We also put in a 2-digit industry year fixed effects and province year fixed effects to allow for the differential change in the time variant change in 2-digit industry and province. So our standard errors are clustered to weight at the 5-digit industry and commute levels. So let's go to our main independent variable, which is tax rate. So we use 2012 to 2017 to estimate the effect of the tax change. And specifically in 2012, we use the tax rate in 2012. And in 2017, we use a tax rate in 2017, but conditional on the fact that firms were in the same industry in 2012. Just in case a firm switched industry in 2017 because of the tax change. In our data, we don't think it's a big deal because only like 5 to 10% of firms switch industry, but we just want to use the 2012 industry to calculate the hypothetical tax rate in 2017, just in case that affects our result. So again, the policy is in 2014 and 2015, and that is what we use to estimate our tax change. And to basically test for our identification assumption that the only thing difference between these firms are the tax change, is we use a placebo year, which is 2007 to 2012. Again, the tax law changed in 2014 and 2015. So if the identification work, we expect that between 2007 and 2012, nothing should happen in these industries. Specifically, we impose the 2012 and 2017 tax rate on the year of 2007 and 2012. Right, so to basically calculate the placebo effect. And finally, in our main specification, we only use VAT rate and not PAT rate because PAT rate depended on revenue bracket, and we worried that it might be endogenous. So as a robustness check in the appendix, we use VAT as an instrument for the total tax rate of VAT and PAT, and the results are very similar to the main result when we just only use VAT for our identification. Any question here? And here we examine all businesses in the panel data. And I described earlier, in Vietnam, only firms who exceed certain threshold have to pay tax, right? But for the first step, we want to include all businesses because in case we want to take into account of some firms purposely not to grow large enough so they don't have to pay tax, and we don't want to miss those. So that's why we include everyone in the regression. So this is the first result on business outcomes. Panel A is our main specification, 2020-2017. Placebo is in 2007 and 2012. First column is on registration status. Second column on number of workers. Third is on lakh of workers. Fourth is on revenue. And fifth is on labor productivity, which is measured by revenue over worker. So as we can see, first of all, let's look at the placebo in panel B. As we expected, basically that because the policy was implemented in 2014 and 2015, so therefore we expect that if the placebo working right, then an increase in tax rate, a potential increase in tax rate from 2012 to 2017 should not affect anything happen in 2007 and 2012. And that's what we see in panel B right here. So this makes us feel more comfortable with our identification strategy. So with that in mind, we take a look at panel A, which is our estimated effect of the tax rate change. And surprisingly to us, we don't see much going on. And the way we interpret it, or the way one would read the coefficient of every single columns here, is that how much the dependent variable change as a 1% change or as a 1% increase in VAT rate. So if you recall, the average VAT rate in 2012 is 1.33 percentage point. So a 1 percentage point increase in VAT rate is a very large increase, about 75% increase in tax rate. With such a large increase in tax rate, we don't see much going on in different dimensions that we are looking at.
I have a question here.
Mm-hmm.
Yes, because you also include province year fixed effect. Now, given that a lot of the changes in tax rate is at the province and across before and after, now shouldn't that province year fixed effect just eat all your variations in your main independent variable here? And that is
so, I mean, that could be the case, but actually tax rate change is by 5-digit industry and commune. So province is a bigger level, administrative level than commune. So we have province, district, and commune. So I did a quick look at the data, and I think the variation is still quite large. The variation in VAT rate is still quite large, even after we include province years fixed effect and 2-digit industry year fixed effect. So yeah, but yeah, that could be a possibility, and we were worried about that as well. So this is how tax outcomes look like. First columns is the tax liability in the first 6 months. Second column is the same as the first columns, but we just impute missing observations of tax with 0, because we thought that if firms do not report their tax liabilities, they may mean that they don't pay it. So that's why we can put it 0. And the third column is the indicator equal to 1 if firms pay VAT and 0 if firms do not pay VAT. So as we can see here, is that across the board, we do see a negative result on tax payment in the sample, but the result is statistically insignificant. But the standard error is quite large here, and we do have a very limited number of observations to play with here. So to some extent, tax outcomes result, let's say that perhaps in the sample there's a decrease in tax payment, but we can't say much about what happened in the population. So I want to kind of summarize quickly the result we have so far and go on a little bit of discussion here. So what we find is that actually we do not find any evidence for changes in household business activities and tax payments as a result of a large increase in tax rates. And as I said earlier, these insignificant results are quite surprising to us, given the drastic increase in tax rate. So what could be a possible explanations? One thing we could think of is maybe there's a weak enforcement. A law change on paper doesn't change the law in practice. So, you know, even though the law say that you have to do X, doesn't mean that the tax collector have to do X, or doesn't mean that the firm's gonna follow it. Right, so that's maybe why we don't see much going on. And actually, interestingly, there's a paper by Turek 2020. I don't remember what country he's working on, one of the developing countries, but he finds is that actually owners of the firms usually just pay the old tax liabilities, no matter what happened to the tax rate. So if that's the case, and it's kind of similar to the weak enforcement, that the story that we have in mind here is that somehow, even though the rates change, but businesses go on as usual, pay the old liabilities, and just do whatever usually they have done before the law change. Another more radical thinking is that perhaps household businesses do not respond to incentive or disincentive, no matter how much large or small it is, right? So we as economists think that incentive going to change people's behavior, but perhaps it's not always the case. So at least from my experience of working with households, not household businesses, but small businesses, or the literature I have read, this reason is quite surprising because small businesses are known to face liquidity constraint. So as soon as if the law is forced, if they have to pay more, I kind of have a strong belief that they're going to react or respond. But you know, I just point this out on the table here because that could be a possibility. And one more possibility that we can think of is that perhaps a lot of businesses in Vietnam genuinely do not make enough money to have to pay taxes. As I said earlier, or described earlier, only businesses that exceed certain threshold have to pay tax. Businesses that are too small, don't have to pay tax. So therefore, a change in the tax law does not affect them, right? And actually, if that's the case, then we expected that productive businesses would respond more to the policy than unproductive businesses. And this is also consistent with Ulysia in 2018, and what they find that high productive firms respond more to tax changes than low productive firms. So I think we can somewhat test for the last bullet point. So let me try to convince you with that, and I conclude. So if we measure productivity of businesses by owners' educational level, so what we are doing here is that we run the same regression as earlier, but now we add in the interaction between education and tax rate, right? So we're expecting that firms with owner with higher educational level is more productive, and hence they would react more or respond more to a tax change. And how do we define education? Is equal to 1 if the owner received at least 2 years of college degree or the community college, and 0 otherwise. So this is the result. Again, panel B is the placebo. We don't see much going on in the interaction term here. In panel A, which is the main effect, 2012 and 2017. So our focus here is on column 1 and column 3 on registration status and workers. So we see some significant results here. So how do we interpret it? So in column 1, the way we interpret this is that a 1 percentage point increase in tax rate is associated with the fact that productive firms is 2.7 percentage points less likely to register than unproductive firms. And a 1 percentage point here is a 75% increase in tax rate. Because again, the average tax rate in 2012 is 1.33 percentage points. So a 1 percentage point increase, meaning that a 75% increase in tax rate. And a decrease of 2.75 percentage points, meaning that a 10% decrease in registration status. Because as we recall, registration, or only 30% of firms before 2012 register for businesses. So a 2.7 percentage point decrease associated with a 10% decrease. In column 3, we talk about number of workers here. Same idea. 1 percentage point or a 75% increase in tax rate is associated with the fact that productive firms decrease 1.75% more workers than unproductive firms. And to my opinion, this magnitude is quite small, but to the defense, maybe education is also a not exact proxy of productivity either. So to conclude, and I'm gonna leave a few minutes for discussion. We not find any changes for households' business activities and tax payment as a result of a large increase in tax revenue. These insignificant results are quite surprising to us, given a drastic increase in tax rate. And it is plausible, as we showed earlier, like the previous slide, that the tax law doesn't affect some businesses because they are genuinely too unproductive to have to pay taxes. And specifically earlier, we showed that as the tax rate increase, productive firms are less likely to register and had less workers than unproductive firms. I'll bet that the magnitude of the number of workers is a bit small. For the next, but I don't think that actually is a whole story, just from my kind of gut feeling or intuition working with households business. So for the next step, I always want to think of a way to test for enforcement, and we want to think maybe of a way to test for non-response of incentive or disincentive, or if you have any suggestion of how to test for this thing, or if you have any kind of other idea of why the result could be the way they are, I would appreciate, but looking forward to hear your comments and suggestions. And with that, I would conclude and say thank you, and looking forward for the discussion. Anyone have any thoughts?
Can I have I'm missing the earlier bit of your presentation. So you are talking about the formal businesses, not the households, right?
No, I'm talking about households businesses, not the enterprise. Hộ cá thể, not doanh nghiệp.
Okay.
Does that help?
Yeah. But you know, typically for the business households, they would negotiate the presumptive tax rather than, you know, tax rate. They wouldn't care about the tax rate.
Right.
Because
Right.
of the formal nature of the business. So there's a tendency they would try to, you know, conceal the revenue. So typically, so it's the tax officers has to, you know, come up with a guess, come up with a guess of their revenue, and then they do the negotiation. So
right, exactly.
It doesn't matter, you know, how much the tax rate change. You know, because
right.
at the end of the day, it is their payability rather than, you know, tax rate.
Exactly. So that's why in the very not very first, but when we say here, what do we expect, right? So explicitly, businesses may not know about tax rate per se. They don't know you have to pay 1% or 2% or 3%, right? But if you imagine there is corruption going on, and tax collectors would be able to, I mean, there's a guess about revenue, okay? But then after that, they're gonna do the back of the envelope calculation given this guess of revenue. This is the tax rate, and if the tax rate increase, then the tax collectors have the right to ask the businesses to pay more in tax payment. So therefore, the bargaining power, and I said here that when the tax rate increase, business may have to pay more tax to the government if there is no corruption and negotiation going on. If there's corruption and negotiation, they may have to pay more tax, like more bribe to the tax collectors because of the negotiation. So that is ex ante. That is why we think that even though explicitly they don't know about the tax rate and don't care about the tax rate, but if the tax collectors come to their door and say, hey, this is the amount you have to pay, and now it changes, then implicitly they have to take into the tax rate into account. So that ex ante, that's what we expect. And
it is a long-term game, and it's a kind of equilibrium has been established, right?
Yeah, exactly.
People tend to know the negotiation equilibrium, right? So even though the taxpayer, the tax collector knows that he has a little more, and I think you are right, that he has a little more power to extort some more bribe or collect some more tax, but that may not be applied across the board because the payability of the tax is much more important here, right? Because if I'm not doing good business, how could I pay the tax?
Right. So yeah. So I think, yeah, sorry, continue.
Yeah, theoretically, you're right. But maybe you are not able to pick it up in terms of the data.
Yeah, no, I agree. I mean, that is why, I mean, one of the reasons we put in the discussion, right, that we put it here, that maybe the change in the law doesn't mean that the change in practice, because exactly one of the reasons you said the payability. Yeah. And that is why one thing we test for the payability is based on educational level. We think that if more productive firms gonna be able to pay more than less productive firms, and that's what then we proxy productivity by education, and we find some evidence of that. Yeah, but again, maybe it's not the only explanation for why. But I agree what you said, and we do find some evidence of that going on.
Right. Your finding is very interesting. Thank you.
Okay, thank you.
Hi, Anh. Could I please make a small comment?
Yes, please.
Have you thought of the ability of household business Vietnam to pass on the taxes to the consumers? Suppose that you are a big business and you are facing VAT and you attempt to pass on some of your VAT to your consumer, your buyers of your product next. I suspect that small household business Vietnam have virtually no ability to pass on whatever taxes imposed by the government to their buyers. You could
Yeah.
possibly the final consumers, like small street sellers, for example, that kind of thing. Because of their inability to pass on the taxes to the buyers of their products or services, I suspect that's why they are sort of insensitive to
Oh,
changes in tax rate. That could be
okay.
one of the reasons. That I just speculate. There's no empirical basis for that. But I just could imagine from theory. If you could imagine the pass on
Ah.
possibility, have you considered that angle?
Actually, I have never thought, we have never thought of ability to pass on because, as you said, I automatically think that they cannot pass on. And I think I was operate under like whatever household business I have in mind here is that if they have to pay more tax, they are less cash. They have less profit. So they are less likely to invest in their business. And that's how all of the expectation that I have in earlier slide come from. They have never coming from the pass on aspect. But you think that maybe the inability to pass on make them insensitive to the tax rate?
I think that I just one way of thinking. Another possibility that your data set is quite short. In terms of VAT, the experience around the world suggests that when businesses face with changes in VAT rate or structure, they don't know what to do. They just sort of business as usual. So after a little while, they become more comfortable, more understand more about the structure of VAT. They can start to respond more to the tax rate. Your data is somewhat short, and there could be a delay effect if you lag them by some period. The effect, the I think your model is you got all current values. You don't have any lag value in any. So it takes business a little while, 2-3 years
Okay, I see.
to that, and your data set somewhat short for that purpose.
Right. So yeah, so I agree there is a short time period. So the VAT changes in 2014 being effective in January 1st of 2014, and our data is collected in June of 2017. So in that aspect, we have 3 years. I mean, in a normal circumstance, I agree that that maybe it's going to take firms a little while to learn, and I have no doubt about it. I was trying to think of how to test for information as well, and it's not that easy to come by. But in that extent, if I think about, even though if firms doesn't know, right, then that is fine. But I think tax collector, because this we talk about kind of a noodle shop like Wan Ban Pho, all of that, right? Then tax collector is the one who comes to knock on firm's door and say that, hey, this is how much you have to pay. So I think tax collector aware of this change, and even though firms don't know about all of this crazy going on that we're talking about, right? At the end of the day, if the law is enforced, then tax collector are going to come and ask for a bigger amount than they usually ask for, and I think that is the margin where I think that firm would react, and that's why I was surprised at first to see why they're not reacting. But I agree that information could be a possibility, though I have to think about what does it mean for tax collector and firms when firms just like, oh my God, what are you talking about, right? So yeah, thank you.
And obviously you have already touched on that topic quite closely. I think that the corruption has blunted the effect of the increase in the tax rate too. You mentioned that yourself. You did not elaborate that in your discussion because for any increase in the tax liability, the taxpayer can reduce that by just pay more informal charges. So that way they pay more will not be entirely increased. So you said that, okay, tax rate may increase by 5%, but in effect, maybe only increase by 2.5% because a lot of, So maybe you think that it is. You anticipated with yourself by talking about corruption and had effect on that.
Yeah, so I mean, I guess I answered the question to somebody asking earlier. I do think that is the case. And I totally agree with you that basically, even though in law, the tax rate increases by 75%, in practice, maybe it's not as much because, you know, they can bribe somebody to only pay increase by 25%. But I think it's still a huge change that from 0% to 25%, it's been a big increase. And that's why I said, I think even if they don't increase their tax payment to the government, if the incentive work the way we think, we would say that tax collectors have more bargaining power now, so they would have to pay more bribe. To the extent how much bribe, then I agree, I don't know, and we just can speculate. But if the bribe is large enough, we would think that firms would react to that, right? By, oh, now I have to pay more bribe, so I don't have money to hire more worker. I don't have more money to, you know, buy more pack of noodles or something along that line. So that's why I was thinking that regardless of corruption or not, there should be some action going on. And that's why I was surprised.
Okay.
Yeah.
But and also the idea that educated business owners are less likely to register their businesses because of increased VAT than the less educated business owner is not a very comfortable one.
So actually, it's depending on what you think of that, right? So I'm not saying that more educated owners are less likely to register their business, but I'm saying that when tax rate increases, more educated owners register less, which means that we were talking about the ability to pay here, and I was just thinking like if business a more educated owner, if they register, they are more in the front line of people just coming their door to knock like, hey, pay this, because they are, first of all, they have higher ability to pay and they are more visible to some extent.
Yes.
So they're going to be affected more by this. But if I'm just like this, selling vegetable on the street of some open market, then you increase no matter what. Sure, I register, but hey, I only have like 500 dong here. What do you want from me? So I think that is the rationale I have why the results are the way it is, because again, I think somebody mentioned earlier, the ability to pay is very important here. And the more you have to offer, the more people come to ask you for more money. So you are more likely to want to hide away from that. Yeah.
Okay, thank you.
Thank you. Any other questions before we close?
Hi, I just want to add in congratulations on the great work, and I could imagine how painful it is to match the panel data over 2 years. So that's definitely great. Congratulations. It's great to see important applied work on the issue of taxation and formality, right?
Thank you.
Yeah, I think it's great. You should be very proud. Now, I'm thinking of one reason why your results, you don't see significant results, right? I think part of it is you only look at rate changes in terms of tax rate. But I think another important component of the tax of the reforms is the clarity of the tax. Here is because it's flat rate, so you have more tax certainty. So it can create certain incentives that actually negate the effect of the price increase. So for example, here, I think there's quite an established literature, at least for the case of African economies I work with, is then you have when there's the gray area of taxation, then the police has more leverage to, or the tax collector has more leverage to extract bribery.
Yeah.
Now,
totally.
when there is, so when there is more clarity, then people would actually have more incentive to actually register, because then they can clearly see, okay, this is what I have to pay in. There's more certainty. It increases. Then they can start demanding what do you get in return. So that increases their tax morale, which is important occasion of registration. It also can have you explain the part where educated owner responds the way they are. If you think of educated owner, might have like the better ability to understand tax code and whatnot. At least they can read, they can write, right? So they can, so they have what is called an information premium in understanding it. Now, if it becomes flat, then it's become easier to understand and everybody understands, then That's why your agreement is negated, right?
Oh, that is great. Actually, before all of this, I really wanted to look into tax uncertainty, because in Vietnam, the way it's written is that after the policy is more clear and before the policy, so it's a whole convoluted process and who knows what. But it was very hard to look at. I don't know if you have any idea of how, like, what we can use to test for the clarity and the certainty and the simplification of the tax code, because I try really hard to think about how to test for it, but I thought it's a very interesting angles, and I don't think that it was quite actually studied in the context of developing countries. But now you said that you work in Africa in tax policy, and you have it's a lot. So maybe I want to ask you more about the literature on that. But if you have any idea of how to test for the uncertainty, then I would love to hear that. And also to bring any idea of how to test for information, I would love to hear that as well.
I'm not very much on taxation, but I think here you can even exploit the variation in across sectors, right? A lot of time, like, people would put you in different brackets, and that's why the negotiation start like 5 digit is very, very detailed level of classification. And what if you got moved to another classification, then that might have a drastic difference, right? So the answer, but so I think you can look at like the variation in taxes across different 5 digit within, say, a 2 digit sector. That standard deviation can allow you to some sort of like how much wiggle room that the tax collector can extort from the person.
Actually, that's a great idea. Thank you. Yeah, I have not thought of that, but that's a great idea. Thank you.
Just more work.
Yeah, no, that's fine. That's fine. This is a very preliminary work, and I think I'm just very excited that finally the data is ready and running. And as far as I know, nobody has this kind of data, and I think it's very important, especially in the policy context of Vietnam, because I don't know if you have read a lot, but anyhow, I read a lot about this kind of thing, and the Vietnamese government is really aimed to like make these sectors become like one of the important part of the economy, and taxing them and also moving them to the formal economy. A lot of discussion about that. Is not quite sure what the benefits are and what the costs are. So yeah, this is very, very preliminary. So I'm happy to take a look to see what else I can do. Sorry, can I ask where are you from? What institution are you? Yeah.
Yeah, me, I'm actually an economist at the OECD in Paris.
I see. Okay.
Yeah,
thank you.
And actually, like, this is fascinating because I'm also doing my PhD at Paris Dauphine, University of Paris Dauphine, and my supervisor, Francois Roubaud, he wrote a book on informal household business in Vietnam.
I see. Oh, that's awesome. Yeah, that's cool.
Yeah. So if you're interested, I think he would be very much interested in this topic as well, because he used the 1, 2, 3 survey, which is like a tag on of the household survey collected by census as well, and then they have an additional module to look at the informality of the business. And actually, as I'm looking at your data, I mean, you have a balanced panel data, which I think is a bit misleading, because then what happened to attrition? Attrition here could be the case of firm exiting and all that, right? Or like
no, totally. I mean, so yes, so this is not, we can't really talk much about exiting. We could do some entry and all of that, but exit is kind of hard to tell whether it's a good thing or a bad thing, right? Because they could become a formal employee to some firms, which is a good thing, or they can exit to become an enterprise, which is right here, which is a good thing too. So I agree. So this is, we can always speak for firms that are still here in the type of business that we're looking at.
Thank you very much. That was great.
Yeah, thank you. Any last minute? Thank you so much. I think I just try to stay a little bit longer, just like to see if anyone else have comments and suggestions, because this is a great opportunity for us.
Is a paper ready to read somewhere?
So we have a preliminary draft that I think I would want to work a little bit more before we circulate. But when it's ready, it's going to be on my website. So thank you.
Great. Look forward to reading it.
Okay, thank you. Okay, I guess maybe there is no other questions. I want to thank you again very much for being here and staying with me up until this point, and for your comments and suggestions. And
Thank you, Anh.
I think, yeah, Chú Cường, maybe you want to have some say? Chú Cường, do you want to say something? Maybe not. Okay, I guess thank you, everyone. If you have any questions and comments, please do not hesitate to contact me. We would love to hear, because again, this is a very new project, and we are excited to keep it moving forward and find hopefully some helpful results, not only to the academic literature, but also to the Vietnamese policy landscape as well.
Okay, thank you so much.
Thank you.
Very much.
Thank you.
Bye.